Hey everybody, JC Peretz here, and I am here with my man Herb Greenberg. Herb, tell the folks you said hello.
Hello, everybody. It's always great to be here with you, JC. You may be genuinely the happiest person I ever come across anytime, any day.
I'm gonna go ahead and share the screen in a minute, but before we get into it, I appreciate that, Herb, very much. It means a lot coming from you, and it comes back to a couple of things. First of all, if I'm complaining, I mean that's just messed up. I'm one of the most fortunate people in the world. I have absolutely nothing to complain about. But in addition, we get to do what we love, Herb. And the beauty of what this is all about is that you have your perspective and the way you do things, and I have my perspective and the way I do things, and it's so complementary. So, folks, you are in for quite the treat today. I get to talk to somebody who looks at the market, right, from such a different way than I do, that it adds so much value. And Herb, I feel like you didn't always realize that until I drilled it into your head, how much I appreciate kind of what you do.
Yeah, I've viewed it for many years. I've sat there and said, gee, I wish we could overlay charts with the kind of things I do, because I know, when I do something, I don't do it with the intention with a timing. I don't say, oh, this is if it's something many of the things I do, people say are shorts, or stocks you should avoid, which is the way I look at it. I would say that most people are here we go. Oh, what are we doing here? Most I don't look at timing. That's not what I do. I'm presenting the facts when I decide there's a good story. Then I leave it up to everybody else to decide when they're going to buy, when they're going to sell, whether they're going to avoid, whether they're going to pile in. I'm agnostic to it. I don't care, though I tend to think, obviously, if it's a red flag, as was hims and hers, and it remains on my red flag list, there are underlying issues that could come back to haunt you if you don't pay attention to them. And I like to point that kind of thing out. It's just the way I'm wired. And so therein lies the market. You know what I always say, JC? I always say, two smart people, same set of numbers, same ability to do the same research, two very different opinions. One is long, one is short.
And also the time horizons, right? Don't forget about that. Yes, the data is there, and one can conclude that it is a short, and the next person, just as smart, just as experienced, can be as long. But also, what happens more often in my experience, folks, and if you're listening to this, it's not about arguing about, oh, I'm bullish, I'm bearish. It comes down to time horizons. Herb, we agree that if on Twitter, 99% of arguments would end immediately if both parties just agreed that they're talking about different time horizons. And by the way, just to be clear, Herb, the folks can't see the charts just yet. Gene Gote will share those charts when you want to talk about them. By the way, if you want to pull up any charts, we can just tell them to put it up. But the folks out there, if you're listening, it comes back to time horizon. How important is that, Herb?
No, it's beyond time horizon. Time horizon is very important. Duration, right? Everybody has a different duration. But I would actually take it to another layer, and I would say it's not just time horizon. It's the type of investor slash trader slash speculator slash gambler you are, because everyone approaches it differently. Some people are long-term investors. Some people would never get involved in it. I know people who don't want to ever touch technicals. That's okay, because everybody does it differently. I certainly don't. I mean, when I buy, do for myself, I look at a chart, but I'm looking at it for a different perspective. I'm not overlaying technicals because I just want to see where something's been and where I think it may be going. But that's very different than what you do. So I think that's the issue of fundamental investors versus traders versus people who I think, by the way, I think there are many people who are just sort of hybrid. They're in the middle. They use technicals over here. They use fundamentals over here. They weigh the odds and they decide how they're going to, put on their position, how much of a position they're going to put on, how they're going to size it. That's what I think a lot of people do. And that's what I really, sort of the audience I love going after, because it's a mix of folks doing a lot of different things.
Now, folks, we're gonna get into a couple of ideas that Herb's brought up, some red flags that investors, traders, market participants of all kinds need to be focused on. So we're going to get to that in a minute. But I have to just reiterate something that Herb just said, guys. Like, if you have a pen, write this down. Herb, you're so right. Because I was kind of going into the, multiple time frames, right? Some people are shorter term, some people are longer term, but you nailed it with objectives. Different people have different objectives. Different people are trying to do different things. In fact, I have different strategies in my own portfolio that do different things. I like the complementary aspect of a mean reversion strategy to complement a trend following strategy. I like longer term portfolio allocation as a complement to shorter term trading strategies that I'm implementing. And to me, that's the way to lower portfolio volatility and increase the compounding of those returns and accelerate that over time, which you're able to do by lowering the overall portfolio volatility and having different strategies. So when Herb just said, to push back on my time horizon thing, it's not that he disagrees, it's that it's even bigger than that. It comes back to objectives. Like, what are you even trying to do? Right? So for me,
Yeah.
selfishly, looking at Herb's names, JC, am looking to them from a short bias. Herb's brought up these red flags. The market might agree, it might not, but I'm going to be there waiting for the market to agree. And when
And
the
you're
market
looking at
agrees with Herb,
and you're looking at them as a short bias. I'm looking at them as stocks to avoid. And then again, I come back to it and say, but you know what? It's do with them as you please. And that's where sometimes we really get into the disagreements, or what would be perceived as disagreements, or the friction, which I think is so important to the markets because that's what makes markets.
yeah, time horizon, risk tolerance is the third that we didn't bring up, right? So time horizon, objectives, and risk tolerance is very different for everybody. And different strategies have different risk tolerance. Like, I have a YOLO strategy that I am trading short term, looking for monster home runs. And I have longer term conservative portfolios as well. So I'm going to be taking a lot more risk in this one. It doesn't mean that I'm a gambler or that I'm a riskier investor, but I like having a YOLO sleeve where I am trading very aggressively in that account, not looking for a 15% return, but looking for 150% return. Like, that's what that sleeve is for. And I'm able to do that because I have other strategies over here. Now, with that being said, a short focused strategy that's short bias, again, very complementary to me as an investor, as a father, as a businessman, is fantastic. And I know for a fact other people too. So I want to get into HIMS in a minute. Okay, I want to get into HIMS in a minute, but HIMS is a little bit of an interesting dynamic where, shorts have been very aggressive and, we've actually taken advantage of it to the upside. So let's hold off on that one for right now. I'd love to dive into Oklo. Oklo is a name, Herb, that you red flagged. And, this is a name that I talk to a lot of traders. I do. This name comes up a lot amongst the trading community, particularly recently. So I'd love to hear your thoughts on what you're seeing now and why these gamblers should be a little bit more defensive, perhaps.
Yeah, I mean, look, the stock is up quite a bit since I first red flagged it, but it was also down quite a bit after I first red flagged it. It's one of those names, right? It's a name that's going to catch the wave of the popularity and the over nuclear, when nuclear is popular, and depending on what the headline du jour is. And this is a case where you look at a company and you say, well, wait a second now, what's really going on here? And you look and you say, oh, this is this is a pure play on nuclear. And when you step back and you take a look and say, well, wait a minute, what do you really know about nuclear? Back in October of last year, I wrote a piece I called Nuclear Gone Wild. And it was about Oklo and a few of the others that have really caught this wave and been the trading vehicles people have used for nuclear. But when you look back at, say, an Oklo, which really made its name because Sam Altman of OpenAI was chairman, and he was strongly behind the company. He's since has stepped away. That gave it a cachet that no one would have paid attention to without him being there, because they're involved in these things called small nuclear reactors, small modular reactors, SMRs. But he's gone. But here's the point: he's not gone as an investor, but he's gone from the board. Here's the point, though, and that is you look at the company, what's its true pipeline? Doesn't really have a pipeline. They don't even have a product that's out right now. Their product, they've been working on a product, trying to get renewals, keep pushing back their timeline. You look at a company with no revenue, no cash flow, no earnings. And therein, by the way, puts is an interesting setup because companies like this, when they start to get customers and they start making forecasts, which for this company is going to really be years out probably, that's when they have to deliver. But until then, these stocks are fair game. They're story stocks. They're perfect for some of the guys that love following your trades. But in the bigger point here, and it's something I've pointed out, is when you have these public companies, you always have to ask, well, what's going on in the private space? Just let's remember something. In this space, if you want to get into the serious technicals, which I mean fundamentals, there are 50 companies or dozens of companies that are vying for the same customers in the same space, including some really, backed by serious money, including Bill Gates. And now over here you have Andreessen Horowitz, others that are doing various things. Amazon, they all have their fingers in this with private companies. There's Westinghouse, which is part of Cameco and Brookfield. They own Westinghouse. People forget about Westinghouse. Very big player in this space. So there's a lot going on where they're not trying to promote themselves because they don't have to promote themselves. I often use Waymo as an example. Remember Waymo? Waymo is owned by Alphabet. No one really talks about it other than they're the ones leading in the taxi race. Well, when all of these autonomous trucking companies were out there, Too Simple was one I spent a lot of time looking at, but all of the others were out there. Everybody's talking about autonomous trucking companies. Oh, these guys, because their stocks traded. Meanwhile, Waymo is over there. They weren't saying a word. They were working in the same space. They knew the limitations in the space on autonomous trucking, but they never really said a ton on it. They just went about, did their own work, and they didn't have a stock to promote because they were part of a larger company. And I think that's what you sort of see in this nuclear space. Will some of these be winners? Will Oklo be a big winner? Someday, maybe. But between here and there, hey, story stock, that's the way I view it. And I think the risks are important to watch because you always want to know who's on the other side of the trade, why they're there, and I'm there trying to explain to you why they're there.
And then Herb, are you seeing in the uranium space in general other situations like this? Is it like an industry problem where you have these kinds of names that are participating for that reason, or is it unique to this company, like you said, with Altman and things like that? Is it unique to this company?
No, because you have NewScale, you have what are some of the others out there that I've written about? NewScale is probably the one that recently got approval for one, so they get a lot of attention. There's one other, his name is escaping me.
So there's a few of them in the uranium space that you think could be a problem,
in the nuclear
not
space,
just Oklo,
that are super hyped because they're public and they can trade. I mean, look, Oklo came public via SPAC. I mean, it's got so many red flags flying over it. But by the way, again, doesn't matter. And here's what's interesting. The other day, I think it was NewScale got approval for one of the reactors, and I was, it's the old joke, buying the rumor, selling the news. Well, ever since then, these stocks have traded down. But they trade in unison on one hand, but on the other hand, they're going to do what they do until they don't do it.
Yep. That's interesting. So from a technical perspective, we're back to these former highs, right? So we're back at those levels. So I look at something like this, and if I'm going to be short, I'm going to be short below 57. So that's the out, because above 57, the risk is up to 88 from there. So I think the risk, if we're above those prior cycle highs, is to the upside. So I think that if you're going to be short this name, you short it, you were below those former highs and you short it against that level, taking target, taking price, taking some profits below 40, right? That's how I look at this name.
By the way, well, no, that's an appropriate thing to think about it for people who trade like you do, or people who don't want to own the stock or want to bet against it.
It's about a risk versus reward profile, right? So if I'm going to enter a trade, Herb, whether it's a buy or a sell, the first thing I'm interested in is, where does the market prove me wrong, right? So in other words, it's not like an arbitrary 5% threshold or 10% threshold, because the market doesn't care about my risk tolerance. The market's going to do what it wants to do. So the way I learned it, and what's worked really well for me over the years, is what would the market have to do to invalidate this thesis, bullish or bearish? So for me, a bearish thesis here is invalidated, at least temporary, but nevertheless invalidated if it's above 57, right? That's the
Let's
level.
be honest.
So
you are just as likely to be short this stock as you are to be long this stock. That's the reality
100%.
of
So
the
let me
situation.
flip that on its head, Herb. If we break out above 57, I'm buying this thing, right? So yes, to your point, the answer is yes, absolutely resounding yes. So hold on. I want to stick on that because here's a great example, getting back to what we just discussed, which was HIMS, another example of a red flag. In this case, we actually bought it on the dip, right? Because of the super high short interest. So even though this thing got slaughtered, there was a huge bounce to take advantage of for traders, and we most certainly did. It was a 120% move in the common stock, right? So that was a serious move fast, and all it was that bounce. Now, from the short side, I'm not long anymore, and the reason I'm not long is because we're back to those former highs, right? We're back to these prior cycle highs, and there's trouble there around 62. So if I'm going to be short this name, I'm not currently, but if I'm going to be short this name, it would be against 62. But Herb, to answer your question, you would just as easily be long the stock than short. Hell yeah.
But it's interesting. If you look at this one, this stock yesterday morning started to rise because they put out an announcement. They acquire some European company. It turns out the European company is a dinky little company, but it's a headline, right? So it's headlines that drive these companies sometimes, especially to I'm not going to say your crowd, but I won't even say the momentum crowd. I'll just say there's this huge retail market that goes after that. I suspect you trade symbols, and a lot of these people trade symbols, but I would suspect that the huge, a lot of these companies, if you look at HIMS and Oklo, what do they have in common? Their CEOs specifically talk about the retail market. Their CEOs specifically take calls from retail investors on their earnings calls. They basically, or they answer their questions.
And that never happens, Herb. I don't listen to conference calls.
Rarely happens, and it seems like it's the most speculative companies with stocks that you wonder what's really going on here. Do they have a press release printing mill in the back like Oklo does, where they're putting out these releases? Like in Oklo, I look at, you want to know what a red flag on Oklo is? I look at Oklo and I look at their press releases, and I go to their IR section. Their IR section is a mix of, headlines, right? But when you open the headlines, some are positive news stories that were in Barron's or the New York Times or wherever they may have been, mixed with their press releases. And then you look at the press releases and you look at, what does this press release really say? It doesn't say anything. They put out a press release a while back about a deal they had with a company called Switch. I looked at it as it's a non-binding agreement over several decades. And I want to think, several decades? What are you guys talking about? It's a non-binding, several decades. That is a press release designed to pump a stock. Now, what'll be interesting on Oklo, I know we have HIMS up on the screen, but I got Oklo on the brain, is what happens if insiders start selling? What happens if we see an at-the-money offering? What if we start seeing things that are not as favorable to current shareholders? How will that impact things? Well, we do have a retail base that seems to want to pile in there. But on the other hand, we have the reality of what that does to dilution and other aspects of the marketplace. So those are things you have to watch. And on HIMS the underlying fundamentals of HIMS remain somewhat dubious. And, the bulls have their story, and you can see it in the stock, and then you can see what happens exactly when the story comes off. So to me, they're not my kind of stocks. Do I wish I'd owned HIMS from $4 to $55? Of course, but it's unlikely I would have bought it.
You make such great points about these useless press releases. I never thought of it like that from a public market standpoint. But I mean, I've seen that being inside the beast of these ridiculous press releases that don't matter. If you're making a lot of money and you're crushing it, you really need to be putting out these press releases. So Herb, kudos to you. That's a great way to catch these red flags. I wonder if there's a way to quantify. I'm sure we could find the data and, find the companies that issue the most press releases, right? And just start there.
Well, yeah, but again, these speculative companies that we tend to talk about, the ones that become bull bear battles, they become tug of wars.
Yeah.
Those are the ones where you'll find a little bit more of this, and you'll find just, there's nothing really supporting it underneath. Hims obviously has built a heck of a business versus an Oklo. Those are two very different companies, but Hims is losing a big flow of their business, and I think that's very, very important. And now they could go into Europe and say, "Oh, look, Europe, we got a toehold into Europe, huge TAM." Here we go again, right? So it gives them another leg, another story to tell, and another plus for its stock until they have to deliver the results.
Well, I'll tell you something, and a big difference between the two. I'm actually looking at the latest numbers because we just got updates on the short interest last week. Hims is 35% of the float is short. Like that's a lot. That's 1 out of every 3 shares in Hims is short. And the thing is about shorts, if you're long the stock, you're only promising to be a future seller. But if you're short the stock, you're guaranteed to be a future buyer. And when 1 out of every 3 shares is short, that's a lot of future buyers, right? The difference between Hims and something like Oklo, for example, is that Oklo doesn't have that short interest. Oklo has about an 11% short interest, which, for something like this is actually not even that high. So, if you're looking to get short, I would much rather be short the names with less short interest than those like Hims, because, a lot of these shorts have overstayed their welcome and they're getting squeezed, right? So
By the way,
go ahead.
Do you have this stock? Do you have this chart that I'd ask for? I don't know if we have it, but it compares the NLR, which is the nuclear ETF, to Oklo, or Oklo to the NLR. It's just a crazy stuff. It shows you just how crazy things
They
are.
move together, right?
No, you gotta look at this thing if you have it.
Yeah, here, hold on 1 second. Here, I'm going to stop sharing. I'm going to pull it up right now. Give me 1 second. So tell me why. So it's NLR?
NLR, it's the nuclear ETF, and then you get Oklo, and you say just a year to date or a 1 year. And by the way, speaking of nuclear reactors, Meta announced yesterday they were doing a deal, but they're going to do their deal for their reactors with an established company, Constellation Energy. So there's again, you're watching as the deals actually get done. These companies need to rely on companies with a proven product, and so it's likely they'll start going with some of the more proven entities when push comes to shove. But yeah, if you can put the NLR versus Oklo up, I think it's pretty fascinating, and I think it's so
NLR is the uranium nuclear energy ETF.
VanEck, right? And then if you can have that should be a good proxy, right? That's a good proxy for what's really going on under the surface. So,
and we do this all the time, Herb. We do this all the time where we try to compare and we try to find the relationships, right? So as you can see here, you got Oklo on top, right? So this is this stock here, right? So this is Oklo, but in this case now we're overlaying NLR.
Can you do it on gains? Can you do it on percentage gains?
I could. I could over the past year.
Yeah, I like to just see them together with the percentage. That's the chart I really like to look at a lot because it'll really tell you a story about, instead of overlying prices, it'll just give you an idea of how, one performs versus the other. And it by itself, it's a picture that tells sometimes a very interesting story.
And then, so I know it's in the utility space, but some of these uranium companies are listed as energy. Do you distinguish between the two out of curiosity?
No, they're lumped in. Look, people playing involved in an Oklo or a NuScale or whatever, they're totally looking for a pure play on nuclear. You can do there's the uranium ETF, there's the NLR ETF. I'm just saying that these are different ways to play it, more conservative versus more aggressive. And it depends where you want to go. And I think if you look at this chart on a percentage gain basis, you see that the nuclear has been left in the dust. And the Oklo or the NuScale or whichever one you're going to put up there has been, isn't that amazing? That's just, what is that? Just year to date, right?
That's just this year alone. To Herb's point, Oklo up 127% this year with NLR. Not a bad year, but up 21, not even close. but they're moving together, right? So
Well, I wouldn't
yes,
call
the
that moving.
outperformance is
Yeah,
definitely there.
yeah,
But like they're dancing similar. It's a high beta trade on nuclears. What it's turned into, right?
yeah. It's interesting. I just think it's interesting. It tells me that Oklo is well beyond where it probably needs to be because, again, it's a company that has nothing but a story. It has, oh, they're working on products. They're looking to get approval for their product. They have customers theoretically lined up at some point, but there's a very different story there than some of the other entities within within the NLR, if I
And
remember
Herb,
correctly.
I got another interesting scenario for you. I love this because we're talking about HIMS, the difference in short interest with the Oklo. This is really fascinating stuff. So I want you to know I appreciate that, guys. If you're at home paying attention, this is how the sausage is made. This is how we think through things. And for those of you who don't know, let's take a step back for 1 second, and then we'll get into MP because some interesting developments over the last week or two. Herb. How do you know so much? Why are we sitting here listening to you? Why am I developing a sleeve of my own portfolio to your ideas? Like, who the hell are you?
I don't know. I'm just a guy who's been researching things for a long time. I'm a former journalist and I spend a lot of time researching things. And when I write about something, I tend to just dive into it. As I've told you, I go to write something. Sometimes there's big gaps between when I write something because suddenly I'm just involved in trying to figure it out. And it's like a big puzzle. And I'm coming into something I may or may not know much about. And I have to go through. And when I publish something, I like to at least have done the work on it or a good deal of the work. And I have a pretty good network and I talk with my network and people who know a lot more than I do. And then I got to go back and figure out if even what they're telling me is correct and understand where it fits into the puzzle. So that's what I have done for decades. And that's what I continue to do and enjoy doing, crazily enough, at this stage of my life. But it still gets me going and keeps my brain firing. And yeah.
So, folks, if you're out there and you're maybe listening to Herb for the first time, or maybe you've known Herb forever, what Herb is doing here, he's had a very successful long career, doing great journalism work, writing about all kinds of companies and everything like that. And now he's utilizing those same skills to be able to bring, attention to particular companies for investors and traders to be able to benefit from that information. I talked to a lot of hedge funds, for many, many, many years. And what I've found is that they're doing exactly that. They're bringing in somebody. These are some of the biggest hedge funds in the world. All the biggest hedge funds in the world, I could tell you do this. They bring in subject matter experts, whether these are former military guys with, former government employees with connections in Africa and China and in areas that this hedge fund in Connecticut, for example, simply does not have. So they bring in somebody who does have those contacts to bring information so that they can make better, more informed decisions in their hedge fund. This is the same thing. This is an expert in the field of journalism and deep diving into companies and finding what's good about them and what's bad about them and now bringing that to investors. So Herb, I just want you to know, I appreciate that so much because I don't have those experiences that you have. I don't have those connections.
But you have the ability for your type of investing to look at things the way I would never think about it. And many of my subscribers, typical subscribers wouldn't, but many do, right? So many of my subscribers, we know a lot of funds and a lot of others, serious investors, use technicals and overlay them to what they do. So I appreciate that. But I think that one of the ways I like to look at it is this. I always tell people this. I'm a hard right brain guy. It's just how I think differently than you think. You're a mathematically left brain. You're a hard left brain type guy, and who happens to be able to write pretty well. And because you can write like you speak, so you don't have to think about it. Guys like me think a lot about what we write, but you're wired that way. And what I've always found, even when I had my last research firm, I paired myself with a forensic accountant and an analyst because I felt you pair the left brain and the right brain and you wind up with a very different thought process and you're thinking about a company in multiple different ways and you come at it more creatively and as you can collaborate with one another, you think about things the other person might not have thought about. Or when the left brain is going through an earnings call transcript or listening to call, they're going to hear something I'm not going to hear, but I'm going to hear something they didn't hear. And to me, That is something that's been lost in Wall Street. It's something I love to do. I love that level of collaboration. And what I really love is when I'm talking to one of my sources and I start questioning them over and over and over again. Somebody who's a money manager or managing their own money, and we start talking, and these are guys who are left brain inclined, and they'll say, "Gee, I hadn't thought about that. I hadn't thought about that." So it's a good relationship, and I try to bring that to what I write, and then I've and then present it in a way that people can understand, because so much of this stuff is so dreadfully horrible to try to read. Because you read, we're talking about companies and stocks, and you try to just make it interesting. Because, by the way, business is extraordinarily interesting. I just wrote a piece today that I put out, a red flag alert, a new red flag on a company called SiteOne. I spent a decent amount of time getting up to speed on SiteOne, which is a landscaping products distributor, really trying to understand the company, really trying to understand what its risks were, really trying to understand how this is the stock over the past 3 years. You can see it's done a whole bunch of nothing with something in between, but it's really been, over that period of time, pretty much a flat performer. But it's a roll up. And what I pointed out in my report, which is, I think it was an enjoyable report to write, and I used lots of charts because you could use the charts to show the story in terms of the returns and how this company's, the trend is not this company's friend. And we're not just talking about a company whose organic growth is sliding, which of course for the roll up is a big issue. It's been sliding for 13 straight quarters. And if you look at it before COVID, it was actually starting to slide before that. So it's catching up to where it was pre-COVID. But what I find interesting here is the company itself isn't growing. Management is sitting here telling you it's a growth story, and it's not. And yet there's, and you can see it in the stock, but yet even stocks like this that are underperforming, people say, "Oh, it's already in the stock." Well, maybe it's not. And there are different types of investors. So for example, there are people who short stocks, and people who short stocks who say, "I don't want to get hurt." Now, one of the risks in this, if you're short it, is that somebody's going to come along and buy it and buy the company and acquire the company, even though it trades at 45 times earnings. Maybe someone sees value, maybe QXO or someone else comes along and wants to buy it. These are things I think about, right? And you go through and you understand, but there are people who'd say, "I'm looking for short alpha." Well, a company like this is more likely to give them short alpha because maybe it's not going to fall too much, but it's definitely not going to rise with the market, and it's definitely not going to perform along with the market, and theoretically it won't or shouldn't, because the fundamentals are so god awful. Whether you're looking at return on invested capital or return on equity, look at the margins, look at the revenue growth, look at the organic. I got a list, and you say, "What the heck is going on at this company?" Well, I know, and I explain it in my report. I'm not going to give away all the details.
Yeah, the link to the report and everything that Herb is putting out is in the show notes, so feel free to check that out there. HerbGreenberg.com. It has a nice ring to it, Herb, right? HerbGreenberg.com.
I think so. That's a decent ring to it.
Let me ask you this. Listen, we've got you. I appreciate the time that you've given us today. I know you're a busy guy. You got things going on, but this is great. I really appreciate that. One thing that stood out for me, this is a scan that we put together that looks at the biggest changes from the short interest reports that FINRA drops every 2 weeks. The most recent one came out on the 27th. That was last week. And then we sort by, some of the biggest changes in both increases in short interest and decreases in short interest. And MP Materials actually came up on the leaderboard there of the short interest changes, right? So in terms of names covering their shorts, right? So these are the ones that are covering their shorts the most. So if you're looking to short, right, I don't like to be shorting names with super high short interest. So when I see the short interest coming off, that's interesting.
Yeah, I mean, I don't know if the short interest came off because I'm guessing it came off over what period of time? Just give me an idea.
That's over a 2 week period from the report that came out last week relative to the report from 2 weeks earlier.
I would bet the short interest came off mostly because it was the period when the shorts were getting bludgeoned in the past 2 weeks, and these story stocks were up in their faces. Yeah. And I would suspect some would say, "Hey, this is one of those retail names because the only people really own this thing are retail that it just may do something and hurt my portfolio. And they already made some money in it and they moved on perhaps. But yet I look at this and I just know it's a retail company. I know based on all the work I've done, it
I
did
mean, I
two
see
reports.
80% institutional ownership.
I did well, 80% institutional ownership with a good retail tail that I think has wagged this thing. And I can tell you one thing, if you read my two reports on this, I would argue that you would look at it and go, wow, what risk is associated with this company? The only reason this company is a quote unquote story that even institutions want to own is because it's quote unquote US rare earths. And all you need to know is rare earths are not rare. This mine has diminished assets in a lot of different ways. China still controls that market. It's a much broader, what's going on worldwide in the entire quote unquote rare earths market is enormous. And what this company actually needs to produce batteries, because now they're starting to produce batteries, are two key elements that they have a shortage of. They got to get from
Hey, I
China.
saw what you did there. Two key elements. That was clever. I see that. I
Thank
see
you,
what you
thank
did
you,
there.
thank you,
I
thank you,
said,
thank you.
you know, you'll be here
So
all day. I'll be here
we
all
can be
day.
here. And you know what? By the way, this is one of those companies where I think is beautiful about it is that if you really want to learn about this, when you start getting into it, you realize, shit, if I wasn't paying attention and in middle school or high school when they were going through the chart of periodic chart of elements, man, your eyes will glaze over because if you really want to understand the company, you got to understand what they really do and what's going on in that industry and where they play in that industry. So
What did
I
this used to be, Herb? Didn't this used to be another company
yeah, it
back
was
in the day?
Molycorp. It was
It was
Molycorp, which
Molycorp, right? Okay, I
Moly.
was going to say I didn't want to sound like an idiot. Yeah,
I
it was
once had
Molycorp.
the CEO of Molycorp. When I worked for CNBC full time. We had the CEO there, and I was part of the interview. And I'll never forget at the end of the interview asking one of those questions where the guy just stared at me. He was so angry at me for asking the question that whatever that question was, but it was when they were in the middle of a lot of controversy before they ended up, a few years before they ended up
Yeah.
ultimately filing for bankruptcy. And then the guy who bought it for a song. So the guy who bought this thing and turned it into MP Materials, he's a former hedge fund guy. He's a hedge fund guy in Chicago. He's made a fortune on it no matter what happens. He's $20 million for this thing. I think it was something like that. It was some ridiculous price. So he did well. No matter what happens, he's done well.
Uh,
But it's a good, hey, it's
yeah,
a
so
good
that was
story.
Molycorp. And for me, this thing's messy. I wouldn't own it. I wouldn't short it.
No,
You
you say
know,
that
this,
now. You come back. You say that now, and I
yeah,
can tell you're saying it now. But I'm probably
yeah.
gonna have a discussion with you. And go, oh, this is one we're gonna own, or this is one. You look at the darn charts because that's what you're not looking at the what
Yeah,
minerals
I
these
let
guys
so
have.
excuse me, Herb, for letting the data dictate my behavior. Sorry, you know.
Okay, each to their own.
Yeah. If it's,
It
I got to tell
works.
you, if it starts breaking out above 26, I'm going to buy the sucker all day.
There you go.
But I'm still looking at it from a short bias. It's just a tough short because it's kind of just like in a mess. So like, I really wouldn't do anything with it right now. I'd keep an eye on it. This is a great example of a red flag that I'm aware of that I'm not necessarily doing anything about. Like that's going to happen too. Like
And
that's,
by the
that's,
way, I have to tell you, I don't like all these. Somehow I've got two or three of these tug of war stocks in my red flag alerts list. I prefer not to have these. I'd rather have like a SiteOne or something where, yeah, what is the risk it's going to get acquired, and that's the issue. I'd rather have companies where there's serious fundamental flaws because they're not as much fun on one hand, but there's less aggravation, and you can just point out because there's so many companies out there that I think don't get the coverage or at least the risks raised because they're not exciting enough. They're not headline names, but they're quite interesting. And again, they're going to lag the market.
ladies and gentlemen, we're here with Herb Greenberg of herbgreenberg.com, talking about his red flags alerts. Herb, you bring a very unique perspective to the market. There are some people out there that are new to you. They might not know who you are, which is crazy. If you were born under a rock,
No, they're
Herb
probably
Greenberg's a
they're probably
legend.
they're probably under 50.
Well, maybe. Listen, Herb's been around for a while. I don't remember not watching and reading Herb Greenberg. So, Herb, what do you want to leave the folks with? Let's finish with some hard value here. What's a good lesson you want to leave the folks with? Something to think about moving forward.
No, my lesson is very basic, and it's just understand why somebody else is on the other side of the trade. And if you're trading these names that you are actively involved with and you've done so well with, just understand that there's risk. And when those shorts are squeezed out because you're having just a high-fiving yeehaw moment because you squeeze the shorts, just remember it's the escalator up and the elevator shaft down.
Yeah.
It's an important thing to remember because those natural buyers are gone. But that's the game you decide to play. If that's the game you decide to play, that's the game you decide to play. There are other people who have made money all along, with slow and steady wins the race. One example before we go, I'm just going to let you know, SiteOne. I use a corollary of a company called Brown and Brown when I tell my story about SiteOne because it's a long-term roll-up and it's been one of the great true compounders over many, many years. And if you compare the returns and the metrics on those two roll-ups, you see what a really great roll-up is that stood the test of time, has stood the test of time, and one that is much more vulnerable.
Guys, did you hear what just Herb Greenberg just said there? It's escalator up, elevator down.
Elevator shaft.
That's right. No truer words have ever been spoken. Herb Greenberg speaking like a true technician there, analyzing the behavior of markets. Don't think I'm going to let that one slide. That is technical analysis 101, baby. Embrace it, Herb Greenberg.
I'm on my way.
You already are. You don't even know it. Your view is beautiful. It's a lovely thing, ladies and gentlemen.
You're never too old to learn new things.
No, and you already know it. You're just calling it something else. You call them elevator shaft. We call them crashes. We call them breakdowns. We're all talking the same thing. But guys, I always like to say you could be anywhere in the world, but you decided to be here with Herb and I, and we think that's cool. So we appreciate you, and we'll catch you on the next one. Adios.
Take care.